Hello, it's me Adnan Rahman. I am the market analyst for Errante, and in this video, I'll be explaining you the fundamentals of Australian dollar, the Chinese economy, the ECB that is scheduled for today. I'll have a separate video, a detailed one for it, and the FOMC and Bank of Canada. Okay, and these all fundamental events are responsible for the price action coming forward. So I'll start with Australian dollar and this Chinese economy. What do we know? The Australian dollar and Chinese economy is going into economic headwinds. Okay, the reason for this is that the Australian dollar, its data was not pretty good. Like for example, I'll talk about inflation. Okay, Australian dollar or Australian economy looks so trimmed inflation. Okay, the webinars or the economic updates by Errante are properly educational and informational as well. Okay, so please watch all of them. So the Australian economy focuses on trimmed inflation and on domestic inflation. Okay, so both of these things are pointing towards the downside. And then RBA is also like having a view of a rate cut scenario, okay, throughout the year. Okay, so this is one thing, the expectations of what is going to happen with Australian dollar or Australian economy. So this is one of the reasons why Australian dollar is moving towards the downside. And if I can show you the chart, you can see this from here. One second. Where is Australian dollar? Okay, I'll take you to the daily chart. See, if you can see this movement, it's totally going towards the downside from the September of last year, I guess. Okay, yeah, okay, and then this was for the Australian dollar, and now I'll take you to the Chinese economy. So what do we know about the Chinese economy? That the GDP is also going a little down. Okay, and the PMIs. Okay, PMI were down, and Chinese economy is not doing well. They are talking about stimulus and injecting more and more money, but the end result is zero. Okay, so that's one of the reasons. And Chinese and this Australian economies are interlinked with each other. So what happens over here also is followed over here. So that's why Australian dollar is in a weakness towards the downside. Okay, so keep this in mind. Besides this, now if I'll take you to the Bank of Canada, we had this news yesterday from the Bank of Canada. What I try to do is have these infographics that you can understand very well. The first thing that happened in this Bank of Canada story is that they had their rate announcements. Okay, rate announcements, and they have cut rate by 25 basis points. Okay, and after that cut the rate was down to 3%. Okay, and keep in mind that even though after having these cuts in the by the Federal Reserve and all that, other banks, USD or Fed has the highest rate available now, and that is why it sees a powerful divergence in the favor of USD. Okay, keep this in mind. I'll try to have a detailed webinar on interest rate divergence so you guys can understand. Okay, by the end of the week I'll have a schedule set for this webinars. Okay, and then after that, the main thing right now is this tariff story, that what will the tariff, okay, will it be implied or not? Because earlier Trump said that he will not be having tariffs for right now, and then he said that it will be scheduled by the end of this month, January, and then it's just daily we have a different story regarding tariffs. So tariff is the main thing, okay, that is focused on that what will happen. Okay, and tariff is the story, like when Trump announced that he will be having tariffs on China, and he said that due to this tariffs and millions and trillions of dollars will fall into the US Treasury. What did China do after that? China was waiting patiently. Okay, as soon as China heard of tariffs, okay, China has announced its own AI. Okay, and I think so $600 billion of of a downfall was seen in the tech industry. Okay, so this is all, again, it's all about tariff. Okay, tariff is the main story. Any news about tariff will move the market up or down. Okay, so keep this in mind. And then the GDP impact projection is like, if the tariffs are coming, okay, the GDP may fall to 2.5% or even below. It's even said that it may go to 2%. So if that is the case, okay, then you will see more downfall in the Canadian dollar. And then asset purchase resumptions. Okay, what is asset purchase resumptions? If you guys are aware of it, okay, it's in easy words, it's quantitative easing. Okay, it's quantitative easing. Quantitative tightening is something when your rates goes up. Okay, and quantitative easing is something when your rates go down. And how this is done, they try to have the increase the supply of money in the economy. That is done by reducing the or reducing their sheets or increasing their sheets. Okay, all that is a different story. Okay, that is a different story. I don't want to touch it right now here, but what you can understand for now is that quantitative easing, okay, or rate cuts can be in play. Okay, so this is what, so in all of this scenario what we see right now, there is no like any news or any signal in which we can have a brief view of Canadian dollar moving towards the upside. Okay, there is no such thing. Okay, and after that, let's go further. Okay, today we have this ECB interest rate news, and I will be having a detailed video for that as well. So there are three options over here. The first option is if they go for a rate cut, what happens? This is the main choice, right? Okay, this is the main choice. The first one, if they go for a rate cut. Okay, if they go for a rate cut, then that means they are not addressing higher inflation. Okay, and in that case the inflation may boost, because when inflation is high, the only tool the central banks have right now is to increase the rates. Okay, that is what they do. So if they will decrease the rates, then there is nothing that is going to stop the inflation from rising up. So in that point of view, if they cut rates, the inflation may go up again. Okay, this is something that is what Fed is also keeping on seeing again and again. Okay, the second one option is that if they will do nothing and they will only maintain the rates, okay, fine, the rates are maintained wherever they are. In that case scenario, as the rates are high, okay, as the rates are high in this scenario, so just example, a guy like me, he won't be able to go to the bank for loan. Okay, you won't be able to go to the bank for loan, and even though if I get a loan, okay, I'll be getting on a high rate. Okay, I'll be getting on a high rate. When I'll be getting on a high rate, that means I have to pay more interest. Okay, when I have to pay more interest, obviously I'll add that interest into my production cost. Okay, when my production cost is increased, I will obviously forward that cost to the end user. Okay, and what is the meaning of this? Inflation. Okay, and obviously when there will be high inflation, my goods won't be sold. I'll be having massive stock in my inventory, and what will happen, what will be the result of this? That obviously the GDP will go down. Okay, that is what they are trying to say over here, that if the rates maintains, okay, then everything will go towards the downside. GDP will go towards the downside. Okay, the third case scenario is wait and see. Okay, they'll just come out and say, okay man, we will wait and see. In other words, they will say that we are data dependent. Okay, if that is the scenario, wait and see, it simply means that they are not going to give any information. Okay, and the market will totally look this information as a massive cloud of uncertainties. Okay, massive cloud of uncertainties. And what happens when there is uncertainty in the market? Okay, usually the economy or the traders, they don't go bull on that. Okay, so keep this in mind. So until now we have discussed about, okay, until now we have discussed about the Australian dollar, the Chinese economy. Okay, and okay, then we have gone discussed about this Bank of Canada, everything we know, a down picture over here. And then we have discussed about this ACB, the forecast. I'll be explaining a detailed forecast with what values can come, okay, in the upcoming video for today. And then now let's have a brief view of this FOMC, that what happened yesterday, okay. Okay, this is the understanding of FOMC, because the best way I thought was to have this infographic to give you a brief view, okay, and this is shareable as well. Okay, you can have all of this on the social media pages. Okay, economic growth in terms of US is okay, it's good one. Okay, I'll have a green ink over here. It's good one. Economy is expanding, and like it's on 3.1, I guess 3.1 or 3.2, somewhere over here. It's highest of all the other economies. Okay, the job market, employment, all are good, it's robust. Okay, the second one is, see, I'll take over here, GDP. Okay, jobs. Okay, fine, this one. And then if we look at the inflation story, inflation is above the target but under evaluation. It's again under that like 2 or 3% game. Okay, okay, fine. And then policy goals aiming for low employment and 2% inflation. What is a policy goal of Fed? Okay, it's known as dual mandate. Okay, the first one is jobs. Okay, and the second one is maintaining inflation. Okay, in 2 to 3% target. This is the whole, the short or cheat sheet of Federal Reserve. So it's in this one they have said that, see, this is also GDP is up, job is good one. See this one, job is also good, inflation is in 2 and 3% over here. So mandate is almost achieved. Okay, so now the current rates are in 4 and 2.5% and 4.5%. This is something that is a little bit causing a pressure on Powell, okay, to lower them. Okay, this is what Trump wants. So in all of this, if we can have a view of this, that USD, there is nothing negative regarding the USD. Okay, so please keep in mind, I've explained you each and everything. Let me have a brief view. AUD is pointing towards the downside, no good news. Okay, ECB today, okay, until now it's also pointing towards the downside. When it comes to Bank of Canada or Canada, okay, no good or possible news, it's also pointing towards the downside and cuts were there. Okay, and FED, almost all good. Okay, this is the scenario for now to understand. Okay, I'll be having detailed video of the ECB today, and hope if you have any questions, please do let me know. Thank you, have a good day.